Seeing the immediate weakness in the Dow this morning, after a spinning top or a series of spinning tops and dojis with the Dow in the overbought condition, gave the prospect that maybe there was going to be a pullback. However, the NASDAQ was not confirming that scenario. The NASDAQ opened higher, didn't trade off, especially didn't trade off very much below the T-line, but then showed strength going into the latter part of the day. This was a clear indication that the NASDAQ was not going to come back down below the T-line, and it was creating this slow curve that indicated that if they started breaking out through this level, we were in another wave to the upside. And the S&P 500 kind of confirmed at the end of the day that it was not going to close. It opened lower, and this is the nice thing about candlestick analysis, is everybody else would be looking at the fact that the S&P was trading lower. However, if you could see there was a green candle created, meaning there was buying after the open, that was a good indication that the bulls were still in this market, that just because the market was down didn't necessarily mean it was being sold off. It opened lower and it was trading higher. Knowing that there was not a severe change of investor sentiment, that the uptrend was still in progress, allows for the establishment of positions that have high probabilities of moving in the right direction. For example, our recommendation on NOW was based on the fact that you had a strong price move, an indecisive pullback, and then a kicker signal off the T-line starting to move back up, which now has the opportunity to create a J-hook pattern, which also tells us what our upside potential is. Today we were buying based on the positive confirmation of the little kicker signal off the T-line. Now if it breaks through this level, we have a good prospect that we are going to be trading much higher to the same magnitude as this level right here. And the fact that there was not a change of investor sentiment in the market allows patterns such as the fried pan bottom, as we're seeing in our recommendation, our re-recommendation of INFI, did the typical fry pan bottom breakout, resisted at the 50, pulled back indecisively, and that's basically what the information incorporated into dojis tell you, that there was indecisiveness between the bulls and the bears, came back to the T-line, and then broke out a positive again, telling us that the 50-day moving average was not acting as resistance, which means our fry pan bottom breakout is still in progress. Our next target is coming up here to fill this gap. Having the knowledge of what should occur in an uptrend without any major change of investor sentiment allows investors to take advantage of high profit patterns. That'll be it. We'll see you in the chat rooms.